Hi, this is Elliot Wave Sage. I want to go ahead and do weekend update. Like always, none of this is financial advice. Always do what's best for you. Just use this for your education and entertainment purposes only. So, I wasn't able to do videos because I got sick again and I was traveling, so it was hard. But I'm back home and feeling better. So let's get this video out there. The market is at a turning point. I do believe, bigger picture, the market needs another swing lower. There's a lot of declarations that the bull market is now upon us. We're going to melt up. Well, we've already, we're going to go back to new highs, a new secular bull market. So there's a lot of reasons why fundamentally that will be very difficult to accomplish, and technically as well. Fundamentally, valuations are way stretched. You had multiple expansion in this rally. Earnings growth isn't supporting it. We also have rates that have been elevated to a level so high that they haven't had time to trickle through the entire ecosystem, especially into the technology earnings. That will happen. It came late in the dot-com bubble, but eventually all the mega cap earnings took a haircut, and then that was it, and that was what caused the second leg lower in the dot-com bubble after, and caused the first connector wave to end. Was earnings warning, and Apple came out and said we're going to miss our earnings. It wasn't by much, but the stock in one trading session lost 50%. And I posted that article for those that don't believe it. So could you just imagine, Nvidia, Microsoft, Facebook waking up and 50% lower because they post earnings warning, because their earnings growth is gone, and that will usher in the recession that everyone is so afraid of, which is already in a lot of sectors that we just don't pay attention to. But it will come to technology. It will be there. I don't think the Fed's news is irrelevant. I think it's a trade-in vehicle. Is all I think when it comes to the next leg of the bear market. It's all about earnings not growing in a recession. That's what this was, and then this just continues until the recession ends. So this will just keep going down and down until eventually there's growth again in the economy. So this is technically now. So we came down in three swings. This could have been the low here on June 22nd, and then it broke the low. You see that? So now you have this irregular bottom with a divergent bottom. So this is not going to hold up. It just won't. Well, this X wave can continue to push higher, so we have to respect that. But at some point, the X wave will end, and we'll get why. So the question is, where are we in the X wave for the SPY? Well, I think you could see here you have a divergence from this peak to that peak, higher price. So we're in some kind of fifth wave move, and then on the 15-minute, a fifth wave of a fifth wave. So the market is technically ready for a reversal of trend, a reversal of this swing. So this entire swing is about to correct, I believe. That's why I call it the summer of misery, because this is going to correct. Now, could it trick in full traders and do something like this? And just keep full, sure. And the connector goes another year, another 7-8 months, yeah. So we have to be prepared to take some long positions on the sell-off too, right? We have to, because it could still just chop around. It doesn't have to just have the bottom fall out of it right away. What will we look for? Well, you'll know. You'll know just like we knew here. The news was obvious. The sell-off, it was just in your face, and I believe whatever will cause this will be the same, and it'll be all known to the markets. No one want to buy the market. Neither will you or anyone else that's trying to short it. It would just be obvious that it's going to have to go lower, and it will be a massive collapse. rapid. So it's like this. Now, if we do just have a correction in the summer, come back to 400, then we'll need to wait and see where some of the individual stocks are and see how we want to play that bounce. Depending on things, we'll have to wait and see. But for now, the other trick the market is going to probably do to traders is if we pull back and we bounce and do something like this. This B wave, everyone will buy the dip. There's already bears saying, "Oh, it's wave 3 of 3," and they're going to load up. Everyone's going to load up here on A, and as B comes, and then they're going to get a massive surprise when this happens. So this is also something you need to keep in the back of your mind that that's more than likely how this will play out. It just won't be that easy. It just won't go straight down. So, so it's a treacherous market. You got to know exactly what you're doing, and there is, some luck to it, and you have to just do what's best for you. Anyway, the Dow Jones is also key to knowing where the market's going to go. So the Dow Jones has finished 5 waves up from this bottom. I have it again in this like WX pattern. So we should be getting a healthy drop coming in the industrial complex. Now, if we were to break this high right here, then it opens up where we can move higher, and the market could be supported to higher prices, and the connector can actually extend to 450. So we keep an eye on that. We got to keep an eye on that. Now, we did see in 1987 the same look here, the same look in RSI and price, and then when we came off this ricochet, it consolidated and then it squirted up and then crashed, right? It comes up, so we could squirt up and then crash. So keep that in mind, that has this fractal, and we also saw that fractal here in the Dow. Very similar fractal, right? Where you come in, you kind of swing down, you come up, you consolidate, and you pump up and crash, right? So here, if you look at this fractal, it's very similar, where you have 3 swings, like 3 swings, and then you come up. And right now, we could be in something like this. This could be where we are right now, and then we come up, and then we come up, and come up, and then crash, and then crash. And then if you look at this fractal, it's kind of almost the same fractal and very similar, where you come down, right? You come down, come up, come down, and then you consolidate, right? I see it's not exact, but I see some similarity here, and then so we could be in this little bit right here, this little bit right here. So I'll be looking for this drop, but for right now, this drop can't happen. It needs to happen in the next week or two. It has to stay below this. So we'll have to keep an eye on that. Now the technology sector has been hanging out in the sell area, kind of topping out. This is a confluence of resistance and Fibonacci's right around here. So it's going to struggle. I think it will reverse here. I'm afraid whoever's in technology, if you look at this pattern, again, when this comes to an end, and it will, I believe it'll be one massive candle down. So just be ready for that. If you're like got a lot of money in technology, the market's going to take it back from you on a day when you least expect it. And then I think you'll get a pattern, something to this effect, down. So then the IWM, I really think this is clear. This shows, again, you have 5 waves, a bounce, and then you fell, you made a lower low, and then you made another lower low. So if there's any instrument that's showing more downside is needed, it's the IWM. And then if you look here, you have 5 down, 3 up, 5 down, and now 3 up, and now it's finding problems. This is why I thought short in Russell was a good trade idea for now. Now, the Russell does have a fractal that, like, you drop, you consolidate, and again, you pump and crash. So you drop, consolidate, you pump, and then crash. So I have to respect that fractal. But for now, we'll see if this could stay like this. But this could be a great short opportunity for the Russell right now. And again, this looks like 5 waves to me. It looks like 3 waves up. So looks like it wants to drop in wave 3 of 3. And we're seeing Bitcoin sell off this weekend, which has been expected and predicted. And if you watch my videos, I told you that that was the most likely path. We didn't know about the Binance news, right? No one knew about that, or the SEC lawsuits. No one knew. I said crypto needed to go down, and one of the crypto stocks tipped the hand to give us that warning. So we took it, and we've been cautious with crypto. So now you have this 3-wave move. We could consolidate sideways and then drop again. I'm looking for 23.2, 20,800, 20,400. If we lose the 20,000 level, but probably I would say most importantly the previous, I think the 2017 high, that was 19,800 something. Then it could become the go to 12,000 chart that I have, which would definitely be the indices pulling to break the October lows. But the way to play this, I think, is to trade this bounce, but then not get too in love with the position, because we still need to respect the potential for lower prices. ETH is got to go down to 1533, 1439, 1288. And again, if it can break these lows, then it could head as low as $300. There's other cryptos breaking down all across the market. If these cryptos that you trade and love, if they break these all-time lows here in the swing, I call it the cycle low, like here's Dogecoin, then the chart could become a go to zero chart, because this is a connector wave for a massive move down, and now you'll get a whole new leg lower. So that would be, super bearish for crypto to start seeing that. But as you can see, it's been saved. Somebody saved it. The robots, the computers that trade this want to save it. They don't want to break it. They're trying to help. They're praying you get some FOMO, get some buyers in here. But once that breaks, it's game over for Dogecoin, Litecoin. Again, I was looking for this massive expanded flat of all ages that's been really going on since even the last cycle. Never even participated in the 2020 cycle. If this could happen, Litecoin at $21 would be or in this area would be an incredible opportunity if it can happen. And there are so many people pumping Litecoin, but we'll see. Can that happen? I don't know. But everything's getting hit in crypto. Link, I do like it for now. Again, as long as it's above 147. It's in some kind of end in diagonal. As you can see, the slant is lower. It's not a bear flag, despite somebody posting that these are all bear flags, and they could be. But this typically is you call an end in diagonal. So this is an end in diagonal for Chainlink playing out. So you just gotta be patient with it, in my opinion. And it shows 5 up, clear 5 up. So if it's 5 up, that means it needs another swing higher. So in the next run, and the crypto will have another run, this Chainlink will break 54. And my prediction is, it's always been that Chainlink will hit $300. And then that may be it that'll be it for this pump. But this pump is just the first phase. Just like this, see this fractal here? See this fractal here? That's what we are. We're like here, and look what happened after. That's what's going to happen. We're going to get this, and then when that's done, then I think this thing's toast for a while. Then there's a bunch of others I'll look at when I go to my crypto charts later. Later, oil again. Oil is showing that it wants to go lower, and it's bearish for the market if this happens. And again, the massive top here, massive top that's ready to break. Now, if X can extend to 87, the market could continue higher. That would be the Dow pumping a little bit more, right, and then crash in later. But it could already be done. You're seeing a lot of weakness in the oil market, so this may already be happening. Something like this. Now we could find the bottom here, so we have to be careful at 48. Oh my gosh, are you serious? It could go to $30, $25. Are we talking a depression coming? I mean, that's what I mean. I don't want to, I'm not here to tell you what you want to hear. I'm just here to read the chart, and the chart is what the chart says. And if you look at the top, from the top of the head to the base, this is where you get to. You get to like $20, man. I don't know. Maybe the Fed did over tighten. Maybe they overdid it, and all of a sudden, though, all at once, everything's just going to slam to a standstill. I don't know what this means, but this is the chart. This is the chart as I see it, and you got to do what's best for you. And the energy stocks also show that it needs to go lower, but I do need to say that it could end here. We have to keep an eye on that. Gold has been not. It's been behaving as if it's in a bear market that wants to take another swing lower. So 1832, 1738. I'll be really careful in gold. It does look like it's got 5 down. Now it could be this flat I have here, but really once 1931 is lost, then the floodgates are open, and that means the dollar is going to go higher. If the dollar goes higher, that will definitely pressure everything risk off. Silver could be a 3 swing move higher, could still drop to 2090, break this low at 1980. So we're still not out of the woods yet, but it's looking better than gold. But typically they trade together. So if gold's going to go down, silver will go down. Someone asked me about natural gas. So you do need to respect this 5th wave, that we're still in this 5th wave, but the longer wave 2 goes on, then it shows that the 5th wave is already over. And I did look at Boyle, and Boyle is actually showing signs that the bottom is in. I said this could be a megaphone bottom. This to me looks like 5 up, 1, 2, 3, 4, 5, with divergence at the top. And given that that pattern, I think we'll get another swing up. And then if you get another swing up, that would mean natural gas should make another swing up. And if it does, then that 2 is too big for a 2. And then it's too big for 4, and so on and so on. And then I think you could get a bull run. So I think you got to keep an eye on Boyle. Wouldn't get too bearish on natural gas. The only exception that would negate this view is if oil started to collapse, the natural gas would collapse with it. But I'm just showing you. I'm showing you a 5-wave bounce. Now perhaps we can bounce like this and then collapse. Maybe this pattern's off a little bit. It could be, something like that. I don't know. I mean, I'm not taking the long trade just until I know oil is at a low. So once oil is at the bottom that I feel comfortable with, then I'll be better at more aggressive with natural gas and not as cautious in it at the moment, because I do think it needs oil to go higher, and I just don't. If oil is going to drop like I have it here down, then natural gas is going to get decimated, right? Why would natural gas pump? There's no reason for it. So that's the reason why I'm have a different take on natural gas. Now, if we get this X wave in oil to 86, the natural gas will pump, but it will fail. The pump will fail from fresh new lows. So you could trade that, and maybe that's what it's trying to indicate with Boyle with 5 waves up, is that we're going to do something like that, which would be the Dow would jump up higher, and then we crash later. But I don't know yet. We'll have to wait and see how it plays out. Then, of course, this 1-year chart no one's paying attention to. 1, 2, 1, 2, 1, 2. It's just begging for the 3 of 3 up, Are the Feds going to have to tighten? Is the CPI going to come in hot? Is kind of what this is saying is going to happen. It's saying to me we're going to get a surprise that no one likes in the market come Fed Day, and we'll see how it goes from there. But it looks like to me that's like another bull flag up. It looks like it's going to be pushing to 6%. And then the 2-year, if it could take this high out, I think that will end the debate and confirm this low is in. That low is in, and then rates are going to start a whole new cycle higher, and that means really the bear market is gonna really get going again, especially in technology. So look for this fifth wave. It could also be another 1 2 1 2, and then it gets a wave 3 moment. You know, yeah, something like this. So 10-year bonds 1 2. Still 3, but if we take that high out, break this trend line, then that would confirm the 5 we're in the 5. The dollar index, I was looking at this. I think we were in a connector for this W move, and now we need Y, and this would line up with the rest of the market and where it needs to go. And I do think that this is a likely path that I have here, and then we could see more downside. Perhaps we won't though, so it's going to be a tough area, but I think in this area then it's time to start thinking about commodities and crypto again, and buying the dip and that type of thing to get either this move or a pullback, and then if we get another swing higher, then you get stopped out of those trades, and then the market will have an epic crash. VIX is on a kind of on this. I drew this trend line. It's kind of right on that now, and it's too low. And they've pushed it down so much, but they're not getting a lot of price action out of it. So it's kind of at the point of diminishing returns, and now it's just getting stupid low. This is just getting ridiculous, and good. Keep pushing it down, because I mean, I think if we get down into these areas, I'll even start buying the VIX, which I don't usually trade. But I mean, this is just stupid levels. But it's obvious to me that there are people that can push the VIX lower, and by doing that, push the market higher. And I think it works until it doesn't, and then eventually they run out of firepower, or they realize it doesn't work, and they need to trap a whole new set of bears, so they allow the VIX then to rush up higher. You get this like flash crash type situations, and it's very similar to what we saw in 2017 here, and then we had that that February Volmageddon, which is really in the news. Was I think federal government shut down Trump. I think that was his first tariffs put on China, and that like freaked everyone out. Again, my history might be off there, but I think that's what happened too. So something like that. So now Trump's arrested. The federal charges no one really expected. So perhaps that's the catalyst. I don't know, but there's obviously something unknown to the market participants that is going to reverse this, that the sellers are going to use. And that's what's happening. These sellers, they like to hold back selling and wait for news to drop that they can exploit to push the price even lower. And that makes sense, right? Because again, if I think of the market as poker, if I'm a seller, why waste my dry powder selling into strength and just having the drones buy the dip. Like, no, you'll wait for some news that hits that people do have a genuine fear of, and then you exploit that news, and then you slam the market with all the sell orders you've been holding back on all at once, and then people are just like panic stricken. So I think that's the game seller, the big sellers that can move the market are doing. They're holding back, and they're letting the pot grow. They say like pretend to be weak, and then they come in strong, but they'll wait for that news. Now, they're not. I don't think they're as good as that they can create the news, market moving news. Now, perhaps they are. Maybe it's a nation state that can do that. Maybe that's who's behind, these markets, nation states. But I do think that once news drops that they can exploit, then they throw out the big guns and they chop the market. And that's what I think it's set up. It's set up like a tinderbox. It just needs a spark to light this bomb that's about to go off. All right, so let's go through some individual stocks. Again, the commodities, as you can see, you know, the XLE lower, right? It found it's struggling at B here, and one more swing down, right? Look, I got one more swing down to 69, and then, you know, the energy complex should stabilize. That should support the market. That may not be good for technology, but it's good for a sideways market, a choppy market. But this is risk off. This is oil lower. Now, could this even go lower to 59? Yeah, 58 it can. It can even break 57 and then bounce and fail again later. So we don't know, but it should go lower. And when I really look at all these energy stocks, it's like Devon, lower. Let's see, Chevron, lower, right? Oxy, Warren Buffett's, you know, love stock, lower. Unfortunately, he's gonna lose some money on that. Rig, I'm kind of a meme stock, lower. XOM, lower. Halliburton, lower. 18. OIH, lower. 214, probably back to 167. Schlumberger, which trades in the OIH, lower, but not much lower. So that one's getting close. It's more bullish. I would like to pick this up here at 34, so we'll get in there. But it looks like, again, A, B, we need C. XOP, exploratory, lower, 97. BTU, BTU, 15. Now that could be finished here. 3, but see, you got 3. You need 3, so no, probably not. Let's see what else. Gold miners. If gold goes down, this will take another leg lower. So be really careful in gold miners. But stop loss 30.10, then lower. But it may not do. It just, no one knows the future, so we don't know. Now, if you look at the individual miners, Barrick Gold. Looks like 5 down here. Now, could it be a running flat? Yeah, maybe, but probably not. So Barrick Gold says more than likely GDX lower. And then Newmont never really got to as deep as I want it. If you look here, 1, 2, 3, 4, it looks like it needs 5. So yeah, it looks like miners could be going lower. And that means silver miners would go lower. But I would again just, you know, we're not the market maker. We just trade it, but it does look like we got this bounce here. This is tradable bounce. But, you know, now it's anyone's guess. If it breaks 26.35, it's going lower. Uranium, 1, 2, 3, 4. If it could make another high, then we got another low here. And then it should pull back to 550. Lithium, a lot of FOMO into these lithiums and other stocks. I like Mosaic. Keep an eye on Mosaic if we can get it at 21. Here, don't like that chart. NTR, definitely don't like this, but it looks like it's going to 38 as the next area. We did get a bounce here, but it just turned out to be another connector lower. CF, that looks like an impulse down, so it looks like some kind of flat that could be coming to an end soon. Again, just kind of clicking through some of these. Standard lithium, so this is another connector for the move down. Y ended there, but again, you have a regular bottom with a lower low, so this is going to fail and go lower. So again, and it's not surprising, right, because of what I'm saying with energy. So none of these stocks show any sequences that look like they're going higher. They all should be going lower. That's commodity complex. Consumer discretionary is a little trickier. Okay, RH is something I was looking at. So here you have a B wave, you have a massive impulse down, a 3-wave move. Now this could be a 1-2. We could still be in B. It could be tradable here. So keep that in mind. It hasn't, but since it's only 3 off the low, it still may go down. It got rejected at 274, so this may take another swing down. Just something to keep my eye on. Nike is another one, but it's kind of weak. But this, if you were going to buy it, this would be the area to go long for a bounce, a better bounce. But we'll see where it's trading before earnings. Now, if it were to break 82, then Nike's in a lot of trouble technically. We would be looking at 34, and that would be a generational buy opportunity. That would be investment of a lifetime, because Nike's not going anywhere, guys. If this plays out, we'll go into those other weak stocks later. Lululemon, again, people were so excited on earnings, but unfortunately just didn't work out. Got massive rejection, no follow through, and I believe it will just continue lower. Typically, when the news is good and the stock still sells off, that's usually a sign of a top, right? Just like the opposite. People want to FOMO into Target. I wouldn't. And again, I don't make the market. I don't want to tell you what you want to hear. I want you to, this is just the way the chart reads. 3 down, 3 up, and we broke the low. So this is a connector for this cycle. It needs a whole new low. It's 52, guys. I mean, it's really sad. And maybe, yeah, 53. So Target's in trouble. They're in trouble. Grand super cycle correction, and the consumer recession that I think we're in the middle of. So yeah, I wouldn't buy the dip on Target. I like Domino's Pizza for a bounce, and the reason I'll show that here. C, we should bounce. I mean, again, it could always be wrong, so do what's best for you. But I believe that's some kind of, ending, like triangle-like C wave, or something like that. And then we should bounce, and then that should fail. So I do expect a bounce and a failure, but perhaps it's 1-2, 1-2, and we get a massive rug pull. So never know. I do see some bullish divergences here on the weekly. So to me, it seems like a bounce is coming for a tradable bounce, and really no one's paying attention to this stock, right? I mean, it's one of those that nobody really is watching. So so again, if you're like, oh, I like to day trade calls and shit like that, well, this could be something to keep an eye on. All right. Wingstop. It's coming into our area, but because it bounced a little too soon, it formed a new connector. So now I'm looking at 174. 174. That's what I want to see to get in on that. And we'll have to redo the count, like I mentioned. This is one. Start watching Ferrari, given that all the gains in the stock market that's been happening. I imagine these guys are going to start having some good sales all of a sudden. So looking for that 3-wave decline, buy the dip, trade. Again, this is trade. These are tradable instruments. If that happens, 279, 267. And then consumer staples, way oversold. This could be telling us why the market's about to go down hard. Again, KDP should be bouncing out of that. Procter & Gamble in a 1-2-1-2. Pepsi. Pepsi, though, is in a B wave. So I do think, though, it's going to go A, B, C, and then down. And, of course, this would raise the target. So then KDP, it could come out of that and then go down. So I don't know how it'll play out, but it also shows that the staples should be bouncing. Everyone's like FOMOing in to Costco, and they reported really bad not earnings that you don't want to see, right? So again, until proven otherwise, it's a 1-2. Will I FOMO in? No. Could this be a massive wave 4 grand supercycle? Yes. Make one marginal high above 612 and then have an epic collapse all the way back down, to the 374. It could do that. Now, I'm calling this for now, but I'm not trading it. BJ's is in an area where it could be a 1-2, 1-2, but since it's broke this long-term downtrend line, now we need to be careful that perhaps we're still in this wave 2, and we'll go lower in A, B, C. So I don't like the buy anymore here on BJ's. I don't like this buy anymore. It's in not a good area. It could be a massive flat, and we could still be in 2. Then it could become another really good buy opportunity at down here at 44. Wait and see what happens. And then of course AEHR is just worked out exactly according to plan, guys. 1, 2, 3, 4, 5. So this 3 should be done, and should be getting a 4. So here, I mean, look. This is I mean, you can go back and watch my live streaming videos as this was happening. These are the games that are being played. When you see a flat, you need to understand for what it is. Know you're going to have to just wait it out, and then know that, hey, if it's a flat, more than likely you'll get continuation out of that. And that's what happened. Again, CFO resigned and the whole company collapses. Yeah, give me a break. That's what it was a joke. It was a joke type. This is just a classic market maker game that happened here, and we called it. And we called the exact low here, the exact low. Watching me, because you guys like to trade this one. I don't trade it because I don't even know what the company does, and I don't personally like buying companies that I don't believe in, unless the chart is like just so attractive. But this wasn't that good. But I mean, this reaction was incredible. Crypto's getting hit hard, but crypto tipped its hand to us early, right? You see that lower low on Mara? Once that happened, we knew crypto is toast. So. And then this is a bear flag. Hey, guys, this is a bear flag. I mean, this is what bear flags look like, not what that what these other guys are posting. That's a bear flag. So this will break down lower. We're looking for 630. MicroStrategy, I don't like to trade it. Actually, it's an ugly chart because you have this 3 waves, and then you made a lower low here, lower low. I mean, I don't know. Maybe the SEC is coming after MicroStrategy. I would stay away from MicroStrategy, guys. I mean, I would be really careful. This chart is not a good chart that I like. Riot looks great for a buy, and it's already starting to break down. I would look for it at 857 in this area. And then of course crypto equivalents, keep an eye on those. The grayscale. Now here everything's getting obliterated. AVAX, like I said, if it breaks these lows, these pivots, let's see here. If it breaks these pivots, the coin's toast. You got to get out of it, because remember, Luna did that. We got out of it. I gave you guys the warning on Luna way ahead of time, and it collapsed. There was fraud, and no one knew any of that. So we don't know what's going on behind the scenes. These are why Binance may be liquidating everything. All this could be wash traded, and we don't know. It's all coming to an end. Binance Coin, we always said to be careful with Binance Coin, but as long as this low holds at 184, technically, there still has a chance. But I think the first sign would be breaking this pivot at 220. If it breaks 220, more than likely it's coming all the way back down to $10. Then ADA, I know people love ADA. It got delisted from Robinhood. That is not good. What's even worse is now you have such a small connector. You broke the low, is toast. And I know you guys don't want to hear that love these coins. You see, this is a connector, guys. I'm really sorry. I mean, I hate giving good people bad news, but the chart's the chart. The chart has no emotion. The chart speaks to me and says 88 people are screwed. Um, Delisting from Robinhood is not a good thing, and what's happening to Binance. So bye bye, down it goes. And let's see if there's anything else in here that's worth taking a peek at. Those idiots at KDA that were yelling at me back when I was giving my updates. Back in the day, we were trading up here, and I was like, oh yeah, we're going down the single digit. These guys were so mad. Now it's even below where I imagined it could get to. Isn't that something? What's Luna these days doing? Connector failed. Yeah, it's just going to the oblivion. Solana is in a lot of trouble too. It didn't come out of this. It did bounce in our buy area. So this is a good example that you hit a buy area. There's no guarantee the move will continue, but you got three waves, right? A three-wave tradable reaction. It failed, and now you have another three waves. So now with Solana, again, you either have to step up and buy it here, is a WXY, if you believe in it, or if it breaks 7.9, it's toast. So it's tough. This may have a better chance. RSI is a race divergence. Solana may have a better chance of surviving whatever's happening right now than the others. If someone put a gun to my head and said, you need to buy one of those shit coins right now, I'd probably buy this one right now, if looking at the charts. The ones that have been, but you do what's best for you, but know that if this low breaks, it's game over. All right, so that's my walk through crypto. This is another one. It's just about to break. I believe that's a B. That's ended. Yes, I'm probably here. Should go lower. So yeah, a lot of the altcoins are bleeding out here. How's Shiba doing? Oh, Shiba's really screwed. Yeah, it broke the low, so Shiba Inu is done. I'll probably put the X there. And again, we got that little bounce. We got these bounces, but they all failed. So they're just, not everything's going to survive in the altcoin world, but they may come back in the next mania, and there'll always be another, crypto mania. But yeah, right now it's massive panic in the crypto universe. Then let's go to financials. Everyone's, PACW is a day trader stock now. If I look at it, it looks like 5 up, so it should be pulling back. Oh, no divergence. So this pattern would fool a lot of traders. It's only 3 up, even though it looks like 5 swings. It's really 3 swings, hidden as 5. So you just have to know that. So this is in trouble. Do not be really careful in these financials right now. How's Bank of America doing? BAC, if it hit the sell area. So I'm telling you, man, the market is primed for the next leg lower. I'm not going to go through those. Healthcare, I still want to see lower. Again, we could click on these all day. I want to see mRNA lower. I want to see Danaher lower. AbbVie lower. Amgen lower. These are just not ready in my mind. Then this. So these low PE dividend charts are some of the worst stocks in the market, but they're the stocks made your grandfather rich back in the day, and they'll probably say that about our stocks 50 years from now. But look, 3M guys, 3M is the most obvious. Look, you got this low, you broke the low, you're moving down. It needs to get down to 62 bucks, right? It's got to get down to 62 bucks. It's got to erase this divergence. What this tells me is the market is going to be definitely weighed down by these low growers in this dead weight. But when the dead weight hits these buy areas, like here, when 3M becomes a buy, when Intel becomes a buy, like I'm talking like a multi-year, either a multi-year swing buy or even multi-year or all-time low, the market will be supported because this is the worst of the worst. So just keep that in mind. So this is a good way to time, when to get maybe a little more aggressive with the market. It's what I used to predict the connector wave with Mattel and others. Now those stocks failed once, and then shortly after the Russell failed, and then Bank of America failed, and then the technology moved for whatever damn reason, which it's been distorting the price action. But a lot of sectors have broken down. But the first thing to break down that gave me the warning was Mattel, the worst of the worst, right? The worst stock broke. Here's the low. We made a lower low on March 23rd, and when that happened, then you knew the market it's got to go lower, and Mattel will go lower too, to 10 bucks. So these ugly stocks here, these broken stocks are going to go lower, and they're going to weigh on the market here. So let's take a look at IBM. This is another one your grandfather loved here. So WXY. So here we're gonna have to take another look at this. So if I look here, WXY, it looks like it needs one more swing higher, and then it should pull down. Too much divergence. So this, whatever this is gonna come to an end soon. And again, I'm just speculating. I could have the count off. It could already be over. And we have to actually maybe go to the quarterly chart. Yeah, not yet, but IBM shows you it needs a swing down. Whenever this ends, it needs another swing down. Rio Tinto needs to get down to 31, right? So I just keep clicking these. None of these are like, oh, they're good buys. Paramount broke down, right? And it's probably going to break on 10 bucks. So all these stocks, these are the worst of the worst. Everyone's like, oh, Ford and EVs. Well, Ford has 5 down, a connector, and unfortunately, I believe its EV bet is about to fail, and you're about to get that, and it's going to break this low, and this low was $1. So this is going to be, they bet the farm on EVs, and I believe they're going to lose that bet, and that's why trying to follow and impersonate somebody you're not is never a good thing. And they tried to trend follow Tesla, but they're no Tesla. They don't have a devout following. Their cars are too expensive. You can't charge them really, even though they got that charging deal. I still think this is in a lot of trouble. Ford's in a lot of trouble here. What would change my mind is if you could come back and take out $26, but I doubt it's going to happen. Then technology, of course. We'll end up with technology. AI, I warned you guys about this day trader's stock. Let's take a look. Now what's interesting is we made a higher high here with 3 waves down. So what that tells me is we're going to get continuation. So perhaps so again, this is interesting, right? And I don't make the market. I want it to crash. I want it to go down, but you can't say everything, So probably in some kind of 5th wave. So if that happens, what do you think is going to happen with technology and the SPY? It's still got more room to pump. Now, the other alternative is it's something like this. Like that. So a lot of alternatives, but now that there's 5 swings up, I would not be shorting this anymore. I would be careful in it, but this also could tell me that the market could want to continue higher. So I would be looking, perhaps to buy this dip as a speculative trade against $30 if you get it. And what this also tells me is perhaps technology is going to continue to pump. As crazy as that sounds. Now Tesla is in the traditional short area, 3 waves. It's got to pull back and make another high to negate this pattern here. So I would just again be really careful in Tesla at this point. Apple at least needs 3 waves down, and then there's a tradable buy here. Netflix still hasn't met the target area of 500. If it could pull back, great opportunity for long. AMD should pull back here to 109. And if AI is going to run, that means AMD will run higher. And then NVIDIA should be pulling back to fill this gap. Then Google is in this area right now, struggling. Again, it could be a 3-wave connector. It could try to buy the dip, and then it could try to negate this bearish structure. Microsoft, 3 waves down, and then that's the way I look at it. Facebook, 3 waves down. So what will negate technology and start a collapse is if it breaks through these bottom support areas, 239 and such. So technology, you could try to buy the bounce here for a continuation of the parabolic move. What that would do is just continue the parabola higher, right? It would just continue this higher to 370. It would just pull back and go higher. So you could try to play that. The SPY would pull back and then just continue higher. And then that would more than likely allow the Dow Jones to come up and then come higher. And then you get this squeeze up and crash. And then the IWM more than likely would come up and squeeze up and crash later. So we don't know how this is going to play out. Like I said, it could be over at any moment, but it still could continue to be FOMO'd higher until the right news manifests itself. What I expect in the short term is a sell-off, and then you have to do what's best for you and play and go from there, and we'll see where we trade. I do like to go long crypto and be more aggressive when crypto is traded in this area. But until then, just kind of want to watch it. Commodities, I'd like to be aggressive when the XLE is trading down in this area. Those are the things I have my eye on. And then technology, I just like to trade it, not fall in love with a position. Like if NVIDIA comes down into this area, I'll take a long to play the bounce. Maybe it'll be another sucker's pump to $400 or $500. I don't know, or like whatever. I don't know the future of what they're going to try to do. But if I can get a nice 3-wave decline, I'd like to buy these to play the bounces and then decide how I want to do it. The only way I would not want to take the bounce, right, is if you come down here and then you get stopped out, right? And if you get stopped out, then it's over. If we see a move like that, then the top's in. This top is in. If we don't, and we just see 3 waves down, right? We just see an ABC, right? Like that, and then it consolidates here, then chances are the bubble continues. So that's how I play this going forward. A lot of folks in Shopify 2, 3 reaction, and again should fill the gap. Again, you could probably play that bounce because it looks like 5 waves up off the low. Let's look at RK real quick while we have a chance. All right, it's in the sell area. If RK could take out 45, it would be massive. It would be a significant result. We'll see. But right now, it's in the trouble. And again, I don't like the FOMO into China until it looks like it's still 3 waves. Be careful. It could still be in a 5th wave of some kind. That's the other thing. I'll go back. I did cover the Hang Seng needs this swing down. It needs another push. So it's just everything's showing lower, except for maybe a few, tech stocks that I found that should go higher, like Netflix and stuff. So, all right, guys, that's all I've got. It's a long video because there was a lot to catch up on, and we'll talk later.